Hello, my name is Jeff McTagg, and welcome. This is the 13th installment in my series on the best mutual fund selection process available on the market, my system. Before we begin, I will suggest that if you have not seen the previous 12 webcasts, you should take the time to review them before watching this webcast. Today I want to show you how I take what we've learned about mutual fund traits and create a meaningful focus list that is clear, concise, and easily explained or defended. I call it the Mutual Fund Report Cards, and the 2017 edition is my 20th annual effort. You are looking at the 2017 Mutual Fund Report Card for the category Utilities and Telecom. The first thing I do is get the data that is furnished to me by Thomson Reuters InvestmentView, which consists of 3.7 million cells of data on 28,000 mutual funds. I eliminate all share redundancy before I do anything else. By the way, did you know that American Funds has 18 different share classes for each fund? Then what I do is I place all funds in the investment category that best reflects the manager's portfolio holdings. Now to do this, I consult with Morningstar, Lipper, Kiplinger, MAXFunds, FundReveal, and Yahoo Finance. And in addition to reviewing what these respected firms think, I make note of a fund's median market cap, bond duration, percent of holdings in equities, fixed income, both foreign and domestic. And without this exhaustive process, I might be comparing apples with oranges. One thing I must do every year is to recategorize what Lipper considers to be multi-cap categories. Now, since I believe in asset allocation, it's pretty tough to have multi-cap categories without violating allocation models. Now I start with these 28,000 funds, and I wind up with a manageable 6,583 of them. At that point, I segment the funds into 98 different categories, where each fund in the category is scored against its peers for each of the 11 fund traits that we've proven lead to successful fund selection. I use a 4-point grading system, breaking everything into quartiles, with 1 usually meaning best and 4 usually meaning worst. But there are times when the process awards a statistical category score of 5. Now this occurs when a fund's category performance is significantly worse than even the worst. Another reason would be to signify that the manager has not been sitting in the seat for 3 years or more, thus bringing into question the relevance of any of the data. Now, the breakpoints for each trait do change by category and by year. You will notice that at the end of the 11 traits is a column called score. We simply add up all of the trait quartiles to arrive at a score, and the category is ranked by funds according to score lowest to highest. Now, after the score, additional information pertinent to each category is included. Now, while I have proven to you that even long-term fund success is a poor fund selection tool, and of course you're not in agreement, guess what? You still want to see how the fund did in the past, so I acquiesce and provide you annual returns of the past 10 years and multi-year returns from 3 years to as much as 20. Now, you notice in the annual returns a couple of things. The returns are replaced with the letters Y and N, and of course that stands for yes or no, and it has to do with did they or did they not beat the category average for that year. In addition, you will see at times that the N is colored in orange, and that happens when it has failed to beat its category average 3 years in a row. You also notice that some years are typed in red, and they have a red border around those years, and that is to draw attention to the fact that that was a losing year for the category, and it gives you an opportunity to see that there are funds that will consistently do well in the bear losing years and not do well in the more robust years, and vice versa. Now, in the multi-year categories, you see I do give you the rates of return, but some of them are colored in orange and some are in green. The ones in green signify that they were in the top 10% of their peer group for that time frame. If they're in orange, that means they were in the bottom half during that time frame. All right? Now, that's consistent from category to category to category. Then what comes next changes based upon the pertinence of this additional data to the investment category. Here we have median market cap, PE ratio, percent in equities, fixed income, and cash, and percent in basically foreign and domestic. And the last category, closed to new investors. And while there is none here that is closed to new investors, if it was, it would be signified with a big red Y for yes. Notice before any of the funds are listed, you see bold numbers inside median market cap across to foreign. That represents the average of the categories. So you can quickly look and see if any particular fund statistic there is under or over the category average. Okay? Now let's go back over to the 11 traits. I want to now go over to standard deviation. A low standard deviation is not necessarily bad, nor is it not necessarily good. It signifies that the fund, if it is a 1, had a low standard deviation, a 4, a high standard deviation. And there will be times with clients you'll want the standard deviation of a 4 as opposed to that of a 1. You probably never want an alpha that's anything but a 1 or a 2, don't you think? And then lastly, return last bull and return last bear. You will find that there are some all-weather funds there. You see a couple that have scored a 1 in both the bull and the bear. But for the most part, if they do well in one, they don't do well in the other. So how can you use this information? Well, first of all, it will allow you to refine your focus list. I said during one of the other webcasts that I've seen focus lists over the years, and what seems to be lacking, while they may be great funds, what's lacking is the why. Why are they on the list? This will allow you to know exactly why they're on the list, and probably in some occasions exactly why they shouldn't be on your list. And because it is a thumbnail sketch of every fund against its peer group, you can immediately analyze and critique any portfolio a client of yours or prospect of yours may bring you. And for many of my subscribers, it becomes a focus list. And what I mean by that is, of the 6,500 funds that got scored, you don't represent all of them, God forbid. But the funds that you do wind up representing, I can create focus lists for you that the only thing on the list are your focus list funds, named for you as well. Well, I look forward to serving you in the future. It's been my pleasure to bring this webcast series to you. And I'll leave you once again with the reminder, unless you can prove it, it's just your opinion.
Right here, right now, right here, right now.